explosive price action is starting to appear as the CPI inflation report came in with a massive beat. Immediate upside or downside momentum from the markets can be impactful even to small and micro cap assets. The cool thing here is that although the markets are set for a short-term pullback, the upside is still of higher probability. Welcome back to the channel. This is ARCa. Let's dive into ticker symbol FNGR. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol FNGR, and what we're observing here is the daily time frame. And the reason why I'm bringing this up, team, is because this is the statistical side of the analysis, and we have entered a signal, right? So we have fired off a signal, and I would say that we are firing off this signal at about 90 to 95%. The reason I say 90 to 95% fired off is because I would really like DMI, specifically the ADX within the DMI, which is the average directional index. I would really like to see this at least at 25%, right, as the dotted white line. And it's currently sitting at about 16% right now. Okay, so as soon as this thing reaches like the 25%, then I would feel a little more comfortable here with the setup. But nonetheless, the signal has fired. Right, and that requires volatility to start an expansion phase from critical contraction into expansion. So I guess the prerequisite here would be that, or the requirement here would be that the volatility component needs to be pivoted towards the upside alongside the moving average as well. And as you can see here, we definitely have both of those. Now, if we imply that right at this point here, this is where the signal fired off yet again or continued, then it is safe to say that on this red candle, this is where the signal fired. So if we're firing at this candle here, it would be at the opening of it. So that would be $4.72. The signal fired off for a statistical probability of a volatility versus momentum setup. And it's a back test for an upside. Okay, so, and what is that upside exactly, right? So let's go ahead and observe this right now. So throughout the entire trading history on the daily time frame, I have taken note of any time that volatility has contracted into the critical zone of contraction with it, which is within the 14 to 15 percentile, and started an expansion phase paired with an upside pivot of momentum. Right, so I've measured every single iteration to where that has happened on the daily time frame, right? So, and these are from all of these samples here. This is the data set right over here, right? So out of a total 20 iterations, 17 have guessed the upside correctly, which gives us an average upside accuracy of 85%, with an average upside thrust of 33.40% upon the firing of the signal. And I will have to say that I did measure the standard deviation calculation as well from the mean, right? So that is showing that we could be facing at the 68% of the results on a standard distribution chart or a standard curve. We would be looking at a move of equivalent to 35.12% to the upside. And I have measured as well the upper bound of the first standard deviation and the lower bound of the first standard deviation, right? So the lower bound of the first standard deviation is coming into a very small 1.72%, but the upper bound of the first standard deviation is coming up right in here, right, to 68.52% to the upside. So now we can go ahead and imply that to the charts here. So let's just make sure that we have our stats located right back here for a measurement, right? So this is the we can go ahead and take into consideration here the 68% to the upside. So let's just say that it fired off right about, let's just see, it fired off at the opening of this 472, right? So this point, yeah, 472. So the top side of this is suggesting 794, which is very, very confluent to the swing high that we have here at 797. And not only that, is that it's landing perfectly at the 2.272 Fibonacci ratio at $7.94. So that's that's incredibly reminiscent of several targets that we faced before. Not saying that we're going there. Remember that this is an 85% probability that we can get a move that's at least 33.40%, with a lower bound being 1.72. Right. These are just statistics. They're definitely not certainties. Okay. So let's go ahead and now apply the standard deviation, 35.12% to the upside from the firing of the signal, right, which was that 472. So 472 moving up that 35.12%. Let's see where it puts us. Wow. I think that's close enough. 35.07% is taking us to $6.38, and take a look at the 1.618 Fibonacci ratio at $6.50. That is absolutely rhyming very nicely with the asset, right? So let's just say, for example, that this thing, you know what, I'm going to go ahead and draw the range. So 638 to 650 could be that 68% of the results at the upper bound of the first, I'm sorry, of the standard deviation calculation. Sorry. And yes. Okay. So now there is a smaller move to take into consideration as well. So 33.40, it's not going to be that big of a difference from that 1.618, but I guess still we should consider taking it into we should take it into consideration nonetheless, right? So 33.40, I think I'm not going to get better than that, right? Let me see. Yeah, it should be fine right there. Yeah, it would be $6.30, right? So yeah, it's nonetheless, it's there, right? It's very similar to this one here. And yeah, of course, I can go ahead and calculate other probabilities here too, but it's important for us to determine that we do have an upside probability in the cards nonetheless. And that is bouncing off right out of the zone that we spoke of down here, right? So we spoke of a support range located between 419 and 442 with a concentrated or focused area of 435 to 425, of which price action came right back down to and bounced right from that. Traditional market close today. Looks like it closed at 501. Very nice beat. And it looks like the after hours will be closing at about $5.06. Okay, so let's go ahead and now move on to the next chart and see what we have, right? So this is the manipulation chart here, team. And as you can see, what price action does, that's zero manipulation, right? So just like these days over here, right? It's kind of appearing in the same structure, a very similar structure. So hopefully we can go ahead and maintain it like this, team. But something tells me that as long as the markets are pressuring everything to the upside, then FNGR and other small caps and micro caps can still ride on this initial burst to the upside. I mean, the SPY bursting up like $6, like a gapping up $6 is just a massive, massive pressure to the upside. Extreme volatility there, right? So I think that this initial response could still be ridden within the micro cap and small cap risk assets into early next week, but we shall see how that pressure continues, right? Now, but yeah, zero manipulation today. And here is the weekly time frame where we spoke of the potential of using the SMA 200 as a bounce zone. And this is our topside resistance of $5, right? So we spoke of the $5 being of higher probability. Price action rallied today to around $5.12 or $5.12, I believe, before retracing back to the $5 mark, even the $4.98 mark, eventually closing at that 501 mark, right? And then the post hours is going to be that 506. Okay, so it's looking very good. And yet again, right, just to kind of point out here that this was the potential bear trap that we spoke of a few days ago, right? Upon bouncing this, we reacquired the inside of this channel here. So the inside of this channel just has massive upside. Not saying that we're going to go to these upside targets, but it does have a massive upside target of around freaking $9, right? So let's just go ahead and practice discretion here. I'm not saying that we're going there. Just have to be, we have to be very careful with how we move within the markets, right? So, and did we say, I guess, I guess 68% is taking us to about $8, right? And the and the sorry, and then the top side of this let's see how many days. 2 days to close this weekly, right? So the top side of this area is 896. So it's curious, it's already curious that the statistics are showing a potential $8 mark, and this is also marking a very deep $8 mark too. Okay, so yeah, from here, let's take a look at a couple of things. I guess the only thing that we can use from this chart here, I believe, could be not the regression from the ascending triangle, but it's actually the 5-day time frame EMA 21 moving average. So that's the 21-day exponential moving average, and you can see clearly here that we are in the process of converting that EMA 21 in a 5-day as a support. So that's very powerful. I love it. Right, we definitely have an upside continuation suggestion, and that would be in respects to the resistance located at the SMA 10 on a 5-day period, right? So that's going to be, let me just go ahead and brighten it up just a little bit. There we go. Yeah, so that would be about $5.62. And we already have a topside resistance located at around 545, right? So yeah, I guess it's looking pretty good. We're already resisting from that range of 505 naturally, right? So we shall see how price action reacts upon that resistance level. But it appears as though we are on the way to that, and we definitely have that statistical setup. And you know what I would like to take a look at is actually the more immediate short term here. Very nice bullish crossover here on the daily time frame RSI. That's a good signal. That's a good sign too, right? So just to kind of throw it out there, team, we still have. I have opened up enrollment yet again for my master students, right? So still getting a lot of people requesting for a seat in the ARC Masters course, which is the 16-week mentorship and charting course, right, for day trading. So please go ahead and get in touch with me at arcmasterscourse@gmail.com, and I shall pass you the disclaimer and the syllabus pertinent to this course here. Okay, team. So yeah, the idea would be to run alongside the track 3 students right now. So track 4 being you or whoever signs up would potentially start in a few weeks or a couple of weeks from today. And kind of run in tandem with the other track students. So everything is looking pretty good there, team. We already started the track 3 on just this last Saturday, and a very good experience and very awesome ambiance. Right. So yeah, let's go ahead and touch down here on. I actually wanted to look at the shorter time frames, and I think the best way for us to do that would be using the RSI, right? So, here's the targets that we were just looking at around 560. I believe it was 560. Let me see what that resistance was. Yeah, at around 559 of the SMA 10. That is rhyming very well with the volatility bands of 543 on a daily basis. So let's see the buy daily. There we go. Check it out. So the buy daily fitting right into that so this is 568 to the mean. So right now what we're doing is a mean reversion, right? So we came right back down to the very bottom side of 425 being the bottom side of these Bollinger Bands. So what that's saying is that we are now retracing back to that mean, and this is respecting a 2 standard deviation multiplier from the mean. And you can see here, right at the top side of that 737, we got that resistance and then started coming right back down, right? So very similarly to this iteration here, we have this bottom side. So yeah, I do believe that there could be a pretty massive upside coming in here, and then some of those resistances could start at around 540 to around 568. So it's looking pretty powerful. Okay, team. Now, as far as the RSI, we have some consolidation in the immediate short term, but still with a slightly downside. Yeah, it looks like there's a downside bias here, and it looks to be very temporary. And the reason why I say temporary is it's simply because of the. Let me see. Oh man. So yeah, simply because of the hourly time frame finding support at the SMA 14 pink line, and the buy hourly suggesting a potential support down here. I think that within the first half of the day, price action can come down ever so slightly and get the support from the SMA 14 and the gravitational zone of the bull weakness percentile before continuing on to the upside. That, I mean, that feels like it's a high probability. Now, and then since the bi-hourly will cascade into the 4-hour, the 4-hour is already ready for an upside, and it's sitting in the gravitational zone of the bull weakness percentile. Yeah, this can continue onwards and upwards. Same situation with the 8-hour, pending that gravitational zone for a push to the upside. Same situation with the 12-hour in the gravitational zone. And the daily is already crossing above its simple moving average 14 period. Right? So I think that the 540 to 568 could land on the 3-day RSI for a slight pullback here. So the 3-day RSI would get that 540 to 568 potential, right? Slightly come back down to the opposing side's gravitational zone, which AKA would be the monthly time frame SMA 14 bounce, and then continue to the upside to fulfill the 7 into 8, maybe $9 targets. I can't say that with a certainty. I just know that we have some statistics suggesting an upside probability with an 85% accuracy. Okay, so it's looking good. It's looking good. Nothing else I can really say about that other than the stats are set to play out. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good rest of your night, and I will catch you at the bell mañana. Adios.